Now, if we can establish ourselves over 69,000, I do think you have a shot at 100,000 here on Bitcoin. But again, it's a big if. It has to be if risk stays in play, essentially. Meaning that if we start seeing the Fed not going to cut rates, if we start to see less liquidity in the system because they're doing away with some of these bank funding programs, that's going to hurt Bitcoin just like the stock market. If the stock market begins to crumble, let's say all of a sudden it becomes a risk-off environment, then we most likely will go down to that 30 to 32,000 level. So Bitcoin itself, with the halving, it's going to continue to keep the hype going. And so I would be very skeptical that we will see anything bigger than a pullback to about that 49 to 50,000 level.
After Bitcoin's recent surge beyond $69,000, attention has turned to the next significant milestone, $100,000. Many analysts are optimistic about reaching this target by 2024, particularly as Bitcoin maintains its position above the $60,000 support level. Gareth Soloway, an expert in trading, discusses the various factors that can drive Bitcoin either upward or downward. Despite the optimism surrounding Bitcoin's potential to reach $100,000, Soloway reminds us that several factors could affect this outcome. One such factor is the Federal Reserve's monetary policy decisions, particularly concerning interest rates. For instance, if the Fed decides not to lower rates or reduce liquidity in the financial system by scaling back bank funding programs, it could negatively affect Bitcoin's rise. Soloway also shares the possibility of a downturn in the stock market, which could lead to a more cautious investment environment. In such circumstances, Bitcoin's value may decrease from around $30,000 to $32,000. However, Soloway highlights that currently, there is confidence in considering the $49,500 to $50,000 range as a strong support level for Bitcoin. Soloway suggests that any declines in Bitcoin's price within this context could offer opportunities for investors to buy, given the significant support observed at these levels. We will now bring you more clips of Gareth Soloway in his recent interview as he discusses his Bitcoin predictions for the year 2024. As we bring you these clips, please take a moment to like this video, subscribe to the channel, and turn on post notifications for more similar videos. Make sure to watch this video until the end, where Gareth Soloway reveals an ongoing global problem that is getting worse and worse. We hope you enjoy the video.
So what you saw was this culmination of greed, right? And again, people chasing a move that was already up. I mean, just looking at the last week, we're up from 50,000. We got that breakout above the spot ETF level of 49,000, and the momentum of that carried it up to this all-time high. But it's also known as a technical double top. And at double top, there's notoriously going to be players that are selling into that level or shorting it. And when you get to this point of euphoria, it gets every last buyer in so that when those sellers and shorters start pounding it down, there's no one left to buy. And that's where you get these dramatic drops. In addition, it's accelerated by the leverage in the crypto markets, right? I mean, in the stock market, you can play 2 to 1. 2 to 1 leverage is what an overnight investor can hold in a regular account. In crypto, it can be up to 100. It can be higher than that. And that creates these pockets where when flushes occur, you get these massive moves to the downside. And I would just like to say this is that if you want the mom and pops that are not in, the people that people hope start to buy into, the pension funds to buy into Bitcoin, you can't have intraday moves of 10 to 15%. They do not want to be involved in that. So this type of move is not healthy for crypto. There's still all this excitement over what we're hearing about all these inflows into these ETFs, record inflows, and it kind of creates this angst to get in. People have to rush in regardless of price, right? I mean, price could have been 100,000, a million. People were still going to get in. And then what happened was people started to realize also that the stock market was coming down, and we saw this big reversal in Bitcoin. So I really do think it's still a risk asset. Now, over the next 10 to 20 years, I think it moves more towards the digital gold, which is actually a very healthy thing for it to do. It's just not there. And again, if you could line up a chart of Nvidia over the last couple months with Bitcoin, they are almost identical. So just purely based on the charts, if we get a significant pullback here in Bitcoin, the 49 to 50,000 level is now major support. So again, that would be just your run of the mill correction. And the reason that's significant is because that was the previous spot ETF high. So we ran up to 49, we pulled back, like you said, to the high 30s, and then we went up and broke out. So resistance, once we broke above 49, resistance becomes technical support. So on the way down now, 49 to 50 becomes huge support. Now, I will say this. If the stock market begins to crumble, let's say all of a sudden it becomes a risk-off environment, then we most likely will go down to that 30 to 32,000 level. As long as the stock market stays strong, which again is all tied to liquidity from our good old-fashioned government printing money, and I know we'll get into that, and the Federal Reserve, then to be honest, pullbacks are buying opportunities in Bitcoin, and 49 to 50 is a major support. So I think honestly, if we see the NASDAQ and the S&P continue to make new all-time highs, the pullbacks will be unbelievably small. Like today, honestly, the low, if we see another new all-time high in the next couple days in the S&P, today's low is probably the low, and we're going above that 69,000 level. It's only if we start to see a little breakdown. So like a 10% correction in the stock market, that takes us back to 49 to 50,000. We get a 30% correction in the stock market, we're back to 30 to 32,000. A 50% correction in the stock market, a la, something like the Great Recession, now you're talking about potentially revisiting the 15 to 20,000 range. So that is a possibility, but again, think about the environment. We've been programmed, the Fed has programmed that they will be always there to inject some good old-fashioned drugs into the markets to just get this market going. If we see inflation not coming down any further and it starts to uptick and we go into a recession, what's the Fed going to do? They can't do anything. I mean, yeah, they'll print, but you know what it's going to do? It's going to spike inflation back north of 9%, probably to 15%. And there's going to be a whole new catastrophic situation, right? Probably even stagflation. So the more players that get in and the more institutional investors that get in, the less they'll get shaken out by whipsaw in the market. So I know we know that there's a lot of hodlers out there that just want to hold on, but a lot of those hodlers are smaller players that are just holding, less than a Bitcoin or one Bitcoin. And those are the types of mentalities that they can get swayed very easily by big news that either makes them overly bullish and buy in at highs or actually exit at lows. As you draw in, and the good example would be Apple or Microsoft, the more big money that gets involved, the less likely they'll get shaken out on hype, essentially. And so what we should see is Bitcoin gets less and less volatile over time. And this is where you kind of think about it as my bullish case for Bitcoin over the longer time, where it starts to behave more and more like gold. Now, it's not going to be great for the traders and stuff like that, but for people that actually believe that you need an alternative to the US currency or to just fiat currencies, this is exactly where we want it to go.
Despite Bitcoin's rising allure due to recent events, Soloway advises caution, especially considering the involvement of individuals who have never invested in the asset before. He reminds us that such widespread interest may indicate a market peak rather than a bottom. And when there is a surge in interest from inexperienced investors, it can suggest a speculative frenzy driven by FOMO. As a result, there's a risk of a subsequent downturn or correction in prices, which could lead to losses for inexperienced investors who entered the market late. Meanwhile, as retail investors are lukewarm towards gold, central banks are ramping up their acquisitions, hinting at a broader trend related to currency debasement. Soloway notes that this significant demand from central banks, coupled with inflationary pressures, could set the stage for a significant breakout in gold prices. Let us now go back to the interview, as Gareth Soloway discusses the current state of the cryptocurrency market, the role of central banks in gold purchasing, and looming concerns regarding the economy and the Federal Reserve's response.
Bitcoin's the sexy thing right now. I mean, it just is. It's where everyone wants to be. You talk to anyone on the street, they're talking about Bitcoin. I've had friends that have people call them up about Bitcoin that have never invested in their life. Oh, I got to get in on Bitcoin. To me, those are signs of tops, not bottoms. And so again, and I'm not talking long-term top, we're just talking short-term here. But again, you look at what the central banks have been doing, buying literally hundreds of billions of dollars in gold and stacking their reserves. And I think that's why gold has stayed so close to its all-time highs, is because there is demand. It's just not from retail investors, but there's massive demand from other governments stockpiling. And again, I think it has to do with the debasement of currencies, is these central banks know that they're going to have to at some point turn the printing presses on. They know the good times are now coming to an end. Well, how do you backstop your own, system? You have to buy that gold. I think if you ask me in the next 10 years what's the best performer, Bitcoin blows gold away. In the next year, if I'm correct that we do see a stock market that corrects significantly, then I think Bitcoin struggles and gold will be the stand. So the trigger is inflation. So we even saw the CPI, PPI numbers get a little hotter. PCE calm nerves just a little bit. But again, if we see inflation sticking around 3% and maybe even upticking to 3.5 to 4%, and we do start to see a recession emerge, the Fed is going to be handcuffed, right? They can't come to the rescue of the markets because they know if they start printing with high inflation already, it's only going to go higher by them adding liquidity to the system. So again, that's your case for a big market correction when the market basically gets caught with their pants down and it says, oh my gosh, the Fed cannot rescue us. They can't come to the rescue like they did in 08, 09, or in COVID 2020 or these other periods. Even in 2018, I still remember vividly, the stock market dropped 20% in like 6 weeks, and the Fed was like, we're going to hike. And as soon as it dropped 20%, the Fed was like, no, we're going to cut now.
All right.
And essentially, if we see inflation, the only reason they could do that is because inflation was 2% or under. With it north of 3, let's say, they can't do that because they will create hyperinflation. They will create a scenario of potentially stagflation, which is the worst. I'm just not a fan of the Fed. I'm sorry. And every which way, I think that eventually we have a system that really is no Fed involved anymore. I think they're gonna be the scapegoat when all of this comes crashing down in the next 5 to 10 years, and we'll probably emerge with some sort of crypto-backed sort of system that's stated run of currency. Like again, the currency cannot expand by more than X% per year, no matter what. Balanced budget. I mean, these are all things that are going to have to be done during this reset period. And again, this reset period is over the next 10 years. This is not like a short-term call, but we're on that path to getting to that point. I don't want to see it. But when you look at what's going on in the underbelly of the economy, if you look at what's going on politically, if you look at all these situations, it's only getting worse. And I worry that AI is only going to accentuate that. Now, AI is great, don't get me wrong. Just like the internet, it will be great in some respects. But I argue that the internet has also been a huge negative, whether it's social media's impact on people's mentality and psychology. All of these things, there's negatives and there's positives. AI is great. It's going to help us in our everyday lives, but you know what? It's also going to kill jobs.
Yeah.
Like you will have millions of people getting laid off. Yeah, there's going to create some jobs too, but not the amount that it's going to be laid off. I've even heard about McDonald's now. They got robots that are now doing all the burger flipping and all that stuff. And so you're going to have this divergence, and we've already seen this, right? Where you have the really wealthy people and then you have the poor people. And that middle class just continues to shrink and shrink and shrink. And AI is only going to accelerate.
As investors and enthusiasts eagerly await Bitcoin's next moves, Soloway's insights provide valuable guidance for navigating the volatile cryptocurrency market and understanding Bitcoin's potential path to $100,000. Despite recent opposition to Bitcoin's rally attempts, Soloway remains confident in its long-term potential, foreseeing its evolution from a risk asset to a store of wealth. Meanwhile, Warren Buffett, a prominent figure in investment, has consistently expressed his skepticism towards cryptocurrency, particularly Bitcoin. He famously referred to Bitcoin as probably rat poison squared, and has remained firm in his stance, dismissing it as an investment opportunity. Even his longtime collaborator, Charlie Munger, criticized cryptocurrency trading as just dementia. Buffett's skepticism towards Bitcoin hasn't wavered, as he continues to predict a negative outcome for the cryptocurrency market, even despite price surges. He has continuously reiterated his disinterest in Bitcoin, emphasizing its inability to generate tangible value or income. Let us know in the comments what you think about this. Do you agree with Gareth Soloway's analyses? What are your predictions for Bitcoin's future in 2024 and beyond? Feel free to share your insights in the comments. If you found this video useful, please show your support by liking it and subscribing to our channel for more informative content on cryptocurrencies and finance. Thank you for watching, and we look forward to seeing you in our next videos. As always, happy investing!